Morning. Wonderful to be here. My first time speaking at Noosa, so looking forward to it. Today, talking about the Hillgrove Gold and Antimony project. This is Levanto Resources. We've been in existence for only a few years. We're a post-COVID float, and it's been a pretty exciting and wild ride since then. Mainly talking about Hillgrove today. Where is Hillgrove and what is Hillgrove? Hillgrove is a gold and antimony project just outside Armidale in central northern New South Wales. Beautiful little town. We're about 20 minutes drive out. We're on a bitumen road. Town itself, highest city in Australia. I was there over the weekend. Arguably it's one of the coldest cities in Australia as well. But a fantastic place, university town. More than a few, I would imagine, grumpy old geos wandering around this room went to New England University. So it's got a huge amount of infrastructure in the place and a lot of assets which make our life very, very easy. What have we got? We've got 1.7 million ounces equivalent of gold antimony at 7.4 grams per tonne. That includes 96,000 tonnes of antimony. That makes that the largest antimony deposit in Australia and about the 8th largest in the world, arguably a little bit higher. We have an exploration target of about another million ounces, and that's about 8 gram equivalent in that. And we have a maiden reserve, the conversion of that, and we've only taken the bits near where our current operation is. That gives us about 630,000 ounces at 6, fully diluted and ready to go, and that includes about 36,000 tonnes of antimony. So that's a pretty good start. We've got a fair bit more to do to convert the current resource into reserves, and we've got a fair bit more to do to prove up the rest of the field, and you'll see that there's a fair bit to do there. What is antimony? Well, most people can't spell it, most people can't talk about it, but here's a quick clip to give you a bit of a highlight, if we can get that to go.
Antimony, the unsung hero in our tech-driven world. Meet antimony. This critical mineral is reshaping industries and driving technological advancements. Let's start with its roots. Antimony primarily comes from stibnite. Imagine a sleek metallic mineral with a purpose. This little element punches way above its weight. From solar panels harnessing the sun's power to fire retardants keeping us safe, antimony is everywhere. But it doesn't stop there. In the defense sector, it's critical in ammunition and military vehicles. Think safety and strategy all in one. And in technology, antimony plays a pivotal role in semiconductors and advanced lighting. It's the silent force making our gadgets smarter and brighter. Now let's zoom out. On a global map, you'll see why antimony is so crucial. The US, EU, UK, Japan, and Australia all list it as a critical mineral. Why? Because supply is limited and demand is high. China currently dominates the global production and supply of the antimony. In September 2024, China announced export controls. This has sparked a scramble. Nations are stockpiling antimony and searching for alternatives. This isn't just another mineral, it's a strategic asset shaping our future. Antimony, small element, big impact.
So there's a bit of a quick overview of antimony, or as the Americans like to call it, anti-money. We actually call it lots of money. When we bought this project, antimony was $9,000 a tonne. That was in December 23. It's currently $60,000 a tonne, and gold's gone up 40% as well. A little bit more on antimony. What's the biggest single driver of it at the moment? It's solar panels. It's an area that's now 30% of antimony use, but it didn't exist about 7 years ago. And I think the one thing we'll probably all agree is that solar panel production will keep going up. It's also used in defence. Every bit of military lead has somewhere between 2.5% and 6.5% antimony, so that's a growing sector. Plus, it's also used in fire retardants. There's been some big changes in legislation on where antimony is required for fire retardants, and that's something that's recently, 2 weeks ago, affected WA. It's listed as a critical mineral in lots of places. When China banned the export of it, they did so because they want every single bit of it they can, predominantly for solar panel use, so they stopped sending it anywhere else in the world. That coincided with a massive drop in supply, and it also corresponded with a massive increase in use, and everybody ran out of stockpiles. So for a while it went along running through stockpiles, it'll all be good, it'll all be good. we'll get some more. That didn't happen. The stockpiles ran out. The world is pretty desperate for it, particularly the US, who don't produce any in their own right, and they use about a third of the world's supply. We will produce 7% of global antimony, so it's a globally significant mine, but we will also produce high-grade gold at the same time. We do talk gold antimony equivalents. It's the easiest way. We actually do our business like that. We mine schedule and everything else, so we do talk gold equivalents. If you want to think about it as some sort of other equivalent, as a copper ore body, it's a 9% copper ore body. So it's quite nice. We acquired the project for $8 million. That included $5 million worth of bonds. What did we get for our $3 million? We got a 250,000 tonne per annum processing plant. We got a fair chunk of New England farmland, so we're not talking sheep stations here, we're talking cattle stations. They're actually worth even more. And we got about $150 million worth of underground development, so you can drive into our ore body and have a look, and if you get on our website you can see the local Channel 7 news crew doing just that. We immediately went straight into resource drilling, and one of our first hits was 31 metres at 2 ounces deeper down in the field. That confirmed lots of things to us, that these ore bodies get higher grade in gold as they go down, a la Fosterville, same sort of ore body. But it also showed us that we get higher grade antimony at the surface, which is very typical of the zones. We then moved and released a PFS very shortly after we got on the ground in 24. That gave us our maiden reserve, 600,000 ounces. We've taken that up a little bit more during the DFS process. Most importantly, we completed an antimony offtake. Now, we've done that with Wogan Resources, who are one of the biggest antimony off-takers in the world. We get paid Rotterdam fast markets price, which is the world standard, and we get that at mine gate. So we have a lot of people saying, hey, you should talk to so-and-so and so-and-so about doing it. We sell at mine gate at the best prices in the world, and that's pretty simple. We did that very early on to convince people that this can be done. So our entire first 7 years production is sold at market prices, which is pretty good. In 25, we released our DFS. That was about 9 weeks ago. We got approval from the government to proceed. From the time we put that application in to getting it was 2.5 weeks, so that was pretty good. Why? Because everything exists there. It's all been done before. The plant's produced everything it's got to do. We will be doubling the capacity of the plant up to 500,000 tonnes, but that was ticked off very, very quickly. The New South Wales government has been wonderful to deal with. As of Friday, we completed a $105 million debt piece. That's a bond. And people say, why do a bond? Why? Because we could. Most people can't, right? This is the simplest, easiest form of moving forward. So our finance package was completed 8 weeks after the DFS. Right, that's pretty unique. We're currently in a trading halt at the moment, and we're in the middle of a $50 million equity raise. That will be the completion of everything we need to move this project into production. With a bit of luck. With a bit of luck, we'll go to the next slide. There we go. So what have we got? Process plant. It's in very good condition. It ran in 2022. We were uniquely lucky to be able to pick up this project for $3 million. If you think about an operational processing plant plus all the underground development ready to go, this was timing, timing, timing and timing. We were very lucky to get our timing right. We were bullish on antimony price. We thought it might go to 20,000. Got that a bit wrong, currently passing 60,000, I said. And gold's gone up 40% as well. So the timing here was wonderful. It was a hardly fought contest to get this. It was really quite brutal and it went on for a long, long time. But we came out as successful winners. The plant itself, been on care and maintenance the whole time. The previous operators are part of our build team, so they know the plant inside out, and that's a huge, huge way to move forward for us. There's a bugger. There we go. So what did we get? We got one of the world's top 10 antimony deposits. The initial ore reserve The rest of it we sort of talked about. The one that I haven't really talked about, and we can't talk about it as part of our financials, is we have a fair bit of tungsten in there as well. So our tungsten is sitting at the point where it has been recovered previously. We don't strictly have a metallurgical profile for it. We're working on that at the moment, but we have a fair bit of tungsten floating around. We get about 600 ppm. If we don't go looking for it, it just comes through the circuit anyway. At $50,000 a tonne for tungsten, that's not too bad. It'll certainly pay for the Christmas party, and we will be bringing that in, and we will be putting tungsten into the mix as soon as we've got the economics on that to do that. The rest of that we probably don't need to see. The definitive feasibility study, done at three prices: a base price, a mid-tier price and a spot price. All the economics were done on the mid-tier. We think that's pretty conservative, 2,800 gold, 41,000 antimony, so 40% below where we are at the moment. That gives you some pretty good numbers. EBITDA of $251 billion free cash, NPV about 700 million, and a payback of about 11 months. We are about 8 months from producing our first ore, so potentially we're talking spot prices. I don't think anybody here is going to expect the gold price to go back to those numbers, or the antimony price to go back to those numbers in the next few months. So if you have a look at the spot numbers up there, the NPV is 1.2 billion, the IRR is 153%, and wrap your mind around this one, the all-in sustaining price for gold is negative 3,000. So about $8,000 an ounce, and we will produce 40,000 ounces. So there's some pretty simple numbers to do there. And for a little project outside a little town, it's not a bad result to get that within 2 years of actually purchasing it. The cash flows are wonderful, and the mine payback on those spot numbers, and you know, we don't normally talk spot, but we are 8 months away, so it's quite realistic, and even those spot numbers are low, mind you. Payback about 8 months. Capital cost to build all this, at spot, it gets a little bit cheaper as the price goes up because we actually get some return during commissioning, but about 127 million. At the current base price, which is what we talk, about 140 million Aussie. So a pretty good way to get there, and by the end of this week we will have something like 240 million in the bank. So where are we? The concentrate's gone to Wogan. Financing, old slide, sorry, this was last week. The financing is now done. We had 34 million at our last release in the bank before the financing started, so we're now going to be somewhere up around about 240. If we can get this to go. We did the $105 US bond, as I say, because we could. You don't hear a lot of it, and you don't hear a lot of it because not everybody can do it. But it was slick. The people we did it with are unbelievably professional. And you know, to do that 8 weeks after the DFS is exceptional. So that gives us everything we need to expand the project and go mining. We'll have underground mining crews on site in a couple of months. MIQM, one of the best plant builders around under Jeff Jones, will be doing our expansion. That's a fixed price, so we don't expect to see that drift around too much. So where are we in the great scheme of things? The plant upgrade study's done, the pre-feas was done, the metallurgy study, which was done in detail, even though the plant has produced all this before. It has produced gold bars, it has produced antimony concentrate, and it has produced a gold concentrate. But we did a lot more metallurgy. We think we can do better, but we used very conservative numbers. The DFS was done, the project finance was completed at 8 o'clock this morning. The final investment decision, well, I think we made that about 12 months ago. We've ordered all the long lead time items. That was done at immediately we finished the DFS, so that gear's turning up. That actually controls the whole time frame. And we will be commencing upgrade and mining within a few weeks to produce first ore next year, early next year. The exploration upside is huge. This area has been mined since 1857. and there's probably another 100 years in it. There's a lot of this to go. We don't have the time to really get into it. I think the focus is the fact that we will be in production in April next year and knocking out some pretty amazing numbers. So thanks for the chance to share the story.